When the dinner is over, they told us, all right, now we go and play. They went back to the palace, and there was a gaming hub with esports like trainers, and everybody put their hoodies on and played till 2 a.m. League of Legends on the game. Like, that's why they say, you know what? Put in 38 billion. We want to have games here. Welcome, everybody, to This Week in Games, episode 351. Today, we have another boys-only crew, but a very different crew than normally. First chair, Mr.
Eric Kress, Strategy and Investing.
And second chair goes to
Josh Chandley, President and COO of Wildcard Games, and due to severe attrition, marketing guy.
Yeah, we got a new host today, Josh Chandley from Wildcard Games. You're known for your articles on Deconstructive Fun. You've actually been on the podcast several times. Good to have you. First time on TWIG. Josh, why don't you tell people a little bit more who you are, what you do, and what are you going to talk about today?
Yeah, thank you for having me on TWIG for the first time. So, like I said, I'm President and COO of Wildcard Games. We're a profitable, fast-growing mobile publisher focused primarily on ad-monetized, highly retentive games. My role is I own the P&L and capital allocation, strategy and vision. I set our culture and grow our directors, who all report to me. I represent Wildcard externally as we scale a larger portfolio. So really, I'm just trying to steer that ship forward as we grow.
Yeah. And on TWIG, you're the UA guy.
On TWIG, I'm the UA guy. Yeah.
just
UA and ad tech.
And today we're going to put you on a spot with AppLovin stuff.
Yeah.
Because we can't talk about it.
Oh, that sounds fun. Let's do it.
Yeah, I think Josh is being a little bit humble. Josh has kind of been the axe on the call about Unity these days. He's been really on top of the AppLovin things. He's helped me a lot with some of my clients and getting in front of them and talking to them through this stuff. So he's been really, really up and close with all the things that are going on in the UA environment out there. And he's going to get to it later.
Yeah,
appreciate it.
Thanks for joining us, Josh. So your views are truly appreciated in this company. And updates on our other coasts, just because people have been asking. So Jen still recovering from the Neuralink surgery. Laura is somewhere on Greek islands based on her on Instagram. And people have been asking, like, where's Laura? Laura started in our new job. Yes, actually, people on this podcast do have jobs. and she's been very much focusing on that. She will be back on the podcast when she feels like it, but currently on Crete. Don't worry about Laura. Based on her Instagram, she's doing real good. And then Phil is also somewhere on the Greek island of Cyprus. So yeah, it's a lot of people here currently now in Greek. I'm also in Greece. So welcome to this Greek episode of TWIG. And today, of course, we're going to talk about Saudis taking over EA. We're going to talk about AppLovin's e-commerce play. AI-generated work slop that is destroying productivity as a nice, easy ending to the episode. I have few shills I need to run by. So number one, we published a masterclass with Unity's publishing platform, Supersonic. There's 5 videos from 5 different experts, and your feedback, you, the listener, is very much appreciated because this is the first time we're doing this sort of a series that we call masterclass. And we have already recorded another one about data analytics, and probably will do another one after that on AI and using AI in development and in game studios. So please check out the first one, DM, send feedback on Slack. Let us know how that went so that we know how to adjust for the future masterclasses. Secondly, the Bosphorus brunch is now open for your signups. That's going to be with Heroic Labs and Game Analytics, 22nd of October. That's the second day of the Moby Dictum event, which is the biggest game conference in Turkey. It won't be at Soho House, as I said last time. It is going to be a bougie hotel by the water near the event space. And I'm not going to tell you which one because invite only, and you have to sign up and get approved to get there. So we have quite limited places on that event. It's a nice place, founders mainly. There's going to be a couple of investors and other people, but you can expect strong coffee, better company, and conversations that matter. And then for both newsletter and Slack to apply to that event. And then last but not least, we got a new partner for the podcast called Vibes, VYBS. It's built by industry experts. It's the fastest growing reward platform on mobile. And what makes them sexy, if you ask me, is the AI-powered targeting that they have that brings the right players to your game. It's a rewarded platform. We're going to do an episode about rewarded platforms for dummies. So that episode will be dropping in shortly. Those were all my shills. And then I have to run corrections for Phil. So Phil said in the last episode that Boom Beach has been outsourced. And there were outrage of this horrific statement. So let me run a correction. The correction is it's complicated because Boom Beach was shipped to SpaceApe at some point. Then it was put in on autopilot. Then it was taken out of the autopilot and has since performed better because they actually run live ops. Surprise. Overall, Supercell, like any other large developer, is a massive user of outsourcing. They got entire studios working on content for them, allowing Supercell to keep in their internal teams compact, nimble, agile, whatever you want to call it. So Phil was wrong about Boom Beach, but kind of right, but wrong in the timeline. So hopefully everybody can live their lives from this correction on.
I think we can live with that mistake.
Yeah. Okay, Phil, you have been probably vindicated for this horrific mistake that you did. Yeah.
All
Let's
right.
talk about markets and industry.
In the game of growth, everyone is looking for that power up. Vibes is exactly that. It's built by industry people, so they actually get the challenges you're dealing with. As a result, they become the fastest growing gamified rewards platform out there. And the results are kind of nuts. With their AI-powered targeting, you're not just buying installs, you're bringing in the right players. And now they've got this new ROAS optimization engine, so your campaigns basically level up automatically. Vibes is built different. It's designed for growth. And I guess you could say it's powered by good vibes. Check out their DOF exclusive case studies by following the link in the description. And go to vybs.co. That's vybs.co. Share your email and join the waitlist list.
Stay ahead of the competition with Sensor Tower, the trusted source for mobile marketing intelligence. Whether you're tracking trends, benchmarking performance, or scouting the next big hit, Sensor Tower delivers the data that drives strategy. Dominate the charts with Sensor Tower.
Yeah. So I am wearing my Electronic Arts in memorandum. So just so you know, I'm wearing my little sweatshirt here. But before we get into the big topic of the day, there's been big news on Microsoft, one that just landed today, this morning. So there are three stories. One, they're increasing price of hardware again. 2 price hikes in 6 months. And to put it in perspective, this piece of shit Xbox Series S is $450. Like, they are out of their gosh darn minds. Like, they need to figure out a way of getting these pricing down, right? I don't give a shit what their strategy is. This doesn't make any sense. 2, the Rogue Xbox Ally came in at $601,000. Again, this is beyond even my insane expectations on the price of this thing. But the $600 device is a piece of shit, right? There's no reason to own that thing. So we're talking about $1,000 entry into a device that actually makes sense. Again, enough. And if you didn't know, this is not the Xbox OS. This is a PC OS. So for instance, if I buy a FIFA game on my Xbox, it's not playable on this device. You have to buy the PC version. And then finally, and this is actually a real indication of where things are going, is that Costco removed all of Xbox's software and hardware out of all their stores. Now, this by itself is not a big deal. They are a very small account, which is actually kind of ironic because it takes nothing to manage this type of account, from my understanding. But it's indicative of a disturbing trend in retail, both for North America, but primarily for Europe, that they are removing all of Xbox's stuff from their stores, which basically is pulling support for the platform altogether. And that is bad, bad, bad juju. So what does this all mean? Look, Microsoft is basically surrendering one of the most important advantages of owning hardware: control over distribution, software distribution, right? The Xbox Anywhere approach, they're basically weakening the very gatekeeping function that the hardware actually provides them, right? So every other content company out there is trying to find ways of securing distribution, right? And trying to deepen that relationship with the customer directly, Xbox is doing the actual opposite by pricing out people out of the hardware and losing distribution at retail, right? They're basically losing control over their own ecosystems. And this really path leads to nowhere but bad things and likely to relevance out there. That was what I really wanted to cover. But this morning, what came out was an absolute vindication of everything I've been saying about Xbox Anywhere, Xbox like premium subscription, right? So this morning, they announced that they were increasing the price of Ultimate by 50% up to $360 a year. That is absolutely just proof positive that this thing was never working on the P&L, right? Like to increase it by that much, it's insane, right? They have a premium subscription at $15 and another essential subscription at $10. This is where it should have been all along, right? This makes so much more sense. And this is kind of where it was before all this bullshit happened the last 3 years to begin with. It's basically like Sony, with a God tier subscription of $360. And for the record, I am going to be paying $360. Like I actually get the value out of $360 from the subscription between my son and I. So I'm not saying it's not a great deal for people like me, but it's a shitty deal for the company, for everyone else, right? Because it's not profitable. So finally, this is a good move by Microsoft. And again, a capitulation subscription strategy for day one content was fucking dumb and not working. Objectively, that the subscription for day one games was not growing fast enough to be sustainable or profitable, right? Having said that, the $15 sub was really funny because it includes all Xbox published games 1 year after launch, except Call of Duty. Like, dude, it's just like a big fuck you, dude. Like all the promises that they made about Call of Duty part of subscription, this completely pulled out, right? Which makes sense because Call of Duty is the title. Anyway, I guess at the end of the day, the $10 to $15 subscription does open up Xbox to a broader audience, but the price point on the hardware remains way too fucking high. They're continuing to lose distribution. And even though the subscription makes a lot more sense, it's still maybe likely too late to matter.
Yeah, I mean, aren't you a little bit concerned about like some pretty material subscriber loss from the reduction in value? Like for an example, like at this point, I'm a PlayStation gamer. I do have Game Pass for an Xbox that hasn't been on in like over a year that I've been paying for it. Now this is a reminder for me to cancel it because I literally don't use it. Aren't you concerned at all about like subscriber loss?
Oh, 100%. 100% they're going to lose a lot of their premium subscriptions. Like there are many people that are not going to pay $360, right? Like myself. But it does create an entry point for a lot of other people to perhaps get involved in the ecosystem, but get out of this day one bullshit, right? Sony is a better price point on the hardware and a better value from the customer in terms of software, right? And so like people know that, and they're likely going to continue to use Sony until Microsoft kind of figures out what they're doing on the platform side. So they may actually be able to increase subs, but just reduce the amount of money they're making from subs. But they're also going to make it up on selling software in theory, right? Right? In theory. I don't know. We'll see.
I think we're just edging the listeners now because everybody wants to hear about the EA acquisition. Okay. so let's just get into it. So yeah, let me just kind of like drive us in there. So gaming giant Electronic Arts was bought in an unprecedented $55 billion deal. It's understood to be the largest leveraged buyout in history, $36 billion, with the remaining amount being financed by loan. That's $19 billion of debt in this deal. And for those who don't know what leveraged buyout is, it means that the assets of the company are being acquired along with those of the acquiring entity are often used as collateral for the loans. The goal is to use the company's future cash flows to service an eventual repay of the debt. This is classic private equity deal making. This is the second most valuable gaming purchase in history, following Microsoft's $69 billion deal to buy Activision Blizzard, which went through after significant battles with global regulators, which in this case did not happen. Seems like this was bought through a text message. The consortium of buyers include Saudi Arabia's Public Investment Fund, PIF, Silver Lake, which is not to be confused with the hippie neighborhood in LA, and of course, affinity partners. So To go a little bit deeper, PIF is a sovereign wealth fund of Kingdom of Saudi Arabia. Silver Lake is a private equity firm that focuses on large-scale investments in technology. They have $110 billion in combined assets under management. And Affinity Partners, for those in unknown what this interesting little private equity firm is first of all funded by PIF and headed by Jared Kushner. And be like, who's that? Well, he's the son-in-law of the president of the United States, Donald Trump. So no wonder this deal got real quickly signed. Anyway, the purchase price puts a 25% premium to the market value of EA. And according to Deloitte, it's on average, there's a 30% average premium across all deals. So this is not on the high end. It's kind of like on the low end of the premiums of the deal. So there's a bunch of questions for Mr. Eric Kress, who's wearing in memory hoodie on this podcast. And some of them include is selling of EA a surprise? Is selling of EA so quickly an anomaly? Is this a fair valuation? Because again, the multiplier is 19.6 or 20, and the multiplier for Activision was 22 for EBITDA. I'm interested to know, is this good for EA? Is this good for EA employees? I've been getting some DMs. I told them, like, welcome to Scopely. I mean, all of my friends are basically
EA
mobile. I'm
Mobile.
like,
yeah,
exactly. EA Mobile is like, you're Scopely.
All right. So first off, this one really hits close to home, right? First of all, it's another publicly traded company that's off the table, which is not good for Mr. Kress, just to be clear. Two, if you didn't know, most people know I actually worked at EA for a long, long time, 7 years of it. But what you might not know is I actually grew up in Saudi Arabia. I actually went back to Saudi Arabia in 2000. My boss in Saudi Arabia was one of the guys that was held against his will at the Ritz for 6 months. So in 2017. And I still have some Saudi friends. So I am actually relatively familiar with the kingdom. So first off, to be clear, this is not good for the industry as a whole, right? Full stop, right? This is not good when big companies get taken off the table. Like, it's just not good, right? But it's not as bad as some of the people that are saying, like, everyone has an opinion on this. Like, LinkedIn has been just littered with opinions on this deal. And I'm also a little bit uncomfortable as being one of the more positive people on this particular deal, because everyone seems to be like doom and gloom right now. And I'm actually not quite that doom and gloom as many others. So I think the fundamental thing that I want everyone to get out of this is that this is not a PE deal, right? It may look like a PE deal. It may smell like a PE deal, but it's not a private equity deal. This is not really an LBO at all, right? And without that fundamental understanding, you just basically go down the rabbit hole of wrong analysis on this thing. And I think Jason Schreier was guilty of this as well, when he basically expected to have mass layoffs at EA, is the way he put it on LinkedIn, right? And I think that's actually fundamentally wrong. Like, I just don't think that this is actually the LBO of old, right? This is not KKR, like the barbarians at the gate, right? Just coming in and just annihilating the company. That's just not what is happening, right? And I do appreciate the fact that Jason did reach out on LinkedIn about this particular subject. I don't think I convinced him on this, but this is just my kind of take on this thing. So anyway, some people are saying there's like going to be 25%, 30% layoffs in order to like service the debt. And I think Jason's in this category. And that is typical for a lot of PE transactions, but I just don't think that this is the case. First of all, as much as I criticize Andrew for his lack of vision, lack of strategy, mismanaging non-sports gaming, mobile, et cetera, his BMI, his fancy talk, all that other stuff, I don't think he would ever sign a deal in which it required him to lay off 25 to 30%. I don't think that's within him. Everyone I talk to says that is not who he is, right? So there's that thing, right? But the fundamental thing is that this deal is Saudi driven, right? Silver Lake is just acting as a face of this transaction to make it easier for regulators to get behind, right? Affinity is dealing with the politics because Jared Kushner is like obviously in with the Trump administration, right? And on their own, Silver Lake would never buy a company like this. They wouldn't take this kind of risk. And I think Saudis would have a tough time doing this on their own as well, right? With the regulatory scrutiny around this. And again, as we know, this was a goal for the Saudis from the very get-go, right? They wanted to get this deal done. They wanted to have a big presence in gaming. They bought Scopely, but they also wanted to have AAA publishing on the console side. I think the one thing I did get wrong on my particular LinkedIn post was the premium, right? The post said that they should get 65 billion. In a typical PE transaction, they should get 65 billion, right? But this is not a PE transaction, really. This is a coalition of the willing, right? Of the management that's willing and the buyers that are willing and the management team that is willing. And this is not a hostile deal in any way at all. So the reason I think kind of this is bad is taking a publicly traded name off the table is really bad, right? It's less transparency, fewer public comps, and just weaker liquidity across the board. You know, when Activision was taken out, that removed the ability for them to do a lot of acquisitions, particularly, you know, EA's out now. Like, it's just not good for the industry as a whole. So here's the good. I think, you know, it is a capital infusion in a way into the industry. The Saudis have been very active and aggressive, and they likely will continue to be that way. So that's actually good. Silver Lake actually could relist their equity stake in this business. We don't know what the Silver Lake piece is, but nonetheless, they could actually go public 3 years from now, in theory, and bring this thing out again, is what the typical thing would be for a private equity firm. But they don't need to do that either, right? So anyway. Job stability. I do think that there will be just job stability amongst the core assets of EA for the next 3 years, which is good. You know, they require that talent. And the one thing that people keep mentioning is that as a private company, they have much more freedom to do different strategies, right? So cut the bureaucracy, streamline operations, reinvest in long-term growth things, initiatives. Now, I think this is kind of fucking bullshit, honestly. I think it'll be, I think it's hard for a company to pivot after doing this for so many years. But I think what people don't understand out there is that the restrictions you have of medium-term planning beyond 2 to 3 years in a publicly traded company where you have to deal with quarterly earnings every quarter, it is fucking hard. It is really, really hard to justify investments in longer-term thinking. So nonetheless, this could open them up. The bad. So what's clear is that there will be cuts. Like, I'm not suggesting there are not going to be layoffs. There are certainly going to be layoffs on this. Central functions that don't make sense, the underperforming studios. Like, honestly, if I was at BioWare, I'd start getting your resume together. Mobile roles, like with Scopely, even though Savvy owns Scopely and PIF owns EA, so they're... Anyway, I would be worried a little bit on some of the mobile operations, clearly. There is some cultural mismatches. And what I meant by this that wasn't very clear in what I wrote is that I think there's just some people that don't want to work for a Saudi company, right? Full stop, right? And though that may be show some attrition at the top. The other thing is that, like, there's no stock-based comp. So you're going to basically have to re-incentivize all these people who have made a shit ton of money in theory on all the stock that they're selling. That may be actually really challenging to do and be competitive because there's not an unlimited upside like there is with stock. And from an industry perspective, and this is more challenging to understand, is that the privatization just means less transparency, like reduced visibility of the gaming space as a whole, right? There's only one name left. There's only Take-Two that's left on the public market. Roblox doesn't count because it's a platform, right? And also, fewer public exits make it limit like liquidity in generally for developers and investors. So I want to be clear on this. I do think this is a far better outcome than like Microsoft's like slow motion train wreck with Activision, right? And the Nepicide at Ubisoft, right? Which is an absolute disaster. And obviously Embracer's like absolutely reckless acquisition spree and an inevitable value destruction. Those three things are far worse than this deal, like 100%, like no doubt in my mind.
There's a voice on LinkedIn called Simon Pullman. He's an entertainment lawyer. So he had some interesting takes. I don't agree with most of them, but I'm going to let you disagree, Eric, on these ones. So first of all, there's going to be layoffs. 25% of the workforce is getting laid off. You're saying bullshit. This is not a typical PE acquisition. And we have Scopely as an example that grew after the acquisition, didn't get smaller, right?
That's not part of the plan. And I think Andrew will be there for at least 3 years. And I don't think he would allow that kind of cut, frankly.
The second point on his list was, I'm not going to go through all of them, but just the most interesting ones, AI stuff. So Financial Times was saying that a lot of thinking here is that the purchasers believe they can use AI to create efficiency.
No. Dude, that guy in Toronto, dude, he's going to be looking for a job, dude. Like, It's just the AI is, yeah, he's a people. He's got to get his resume dusted off and go back to fucking McKinsey, dude. Like, no way, dude. No fucking way, dude. AI is moving.
Oh, you mean the EA McKinsey guy? Like the strategy guy?
Yeah, who cares?
Yeah. I mean, he's fine. He got his stock.
He pontificated for like 3 years on bullshit, right? Now he's made his money. Now he can go like live his life up in Toronto.
Yeah, he's gonna get hired by Meta or Google or whatever, $1 trillion company pushing AI.
Dude, I'm sure that guy is the nicest guy. I apologize for being a jerk. It's just so funny. Like these type of roles in these companies just crack me up.
EAFC goes free to play.
No, dude, that is the stupidest take I've heard. Like, why would you give that up? That's $1 billion a year. That's crazy, right?
Predictable.
You know what's really crazy
revenue.
though? Is that the Saudis are fucking in bed with FIFA, dude. FIFA is coming back, baby. FIFA is back next year for the fucking World Cup. Is it next year for World Cup? Whatever the World, we'll get FIFA back, dude. Because like those guys are like totally tight,
Yeah.
I know the FIFA guy knows he made a fucking mistake. Like it was so stupid what he did. But I think with that relationship, we're gonna get FIFA back, and we're gonna pay nothing for it, right?
Yeah.
Or let the Saudis pay. Yeah.
No more EAFC. Let's bring FIFA back. Like, let's bring the other Swiss guy.
Yeah. FC's stupid. Let's bring FIFA back. And we all call it FIFA anyway, right?
Exactly. None of these Costco names for a game. Let's put in the premium back. So then another part was there's going to be fewer franchises.
I mean, you're going to divest out of the things that don't make sense, right?
Okay.
Like, again, Mass Effect, BioWare, Dragon Age, like all that
Dragon Age. EA will be divided into EA Sports and the other shenanigans.
Okay. Yeah. I mean, that's the way it is now. So I don't know why that's not a big.
And it kind of makes sense for a PA perspective. If you want to sell this company after 3 or something years, then it makes sense to.
Again, that is not the goal. That's the whole part. Like the minute you start thinking in those terms, you're going down the wrong road, right? They want to build. They don't want to sell. Saudi doesn't want to sell this thing. They want to own it and they want to build it, period. Yeah. Like that's their goal. They've said that. Like, it's not like I'm making this shit up, They're
going to have studios in Riyadh and Jeddah and so forth. Okay, mobile will be a bigger focus after this acquisition for EA.
That is the stupidest take ever. Well, okay. Mobile will be a focus for the PIF or the Saudis and the Savvy, but I don't know if they may move it all over to Scopely, right? That would be the make most sense, right? Like none of it belongs within EA, right?
Yeah, that would make all the sense. EA shouldn't be doing mobile.
Scopely is at such scale now that everything that EA does is mice nuts for them.
Except FIFA.
Except for FIFA. Sorry. Yeah, right. Yeah. You're right. FIFA Mobile is amazing. Like they're doing really well. But everything else is completely a rounding error, right? So that's a tough one. I think that's going to be the hardest decisions that they have to make is to figure out how to do that, right?
We should have EA's head of mobile on the podcast. He's ex-Scopely.
Oh, yeah, right. Like he would ever come on this podcast. Give me a break.
He would like to. The question is, EA allows it. IP sales at a bargain after this acquisition. So basically, EA will be unloading, like you said, second-tier IPs.
No. That's what he said?
Yeah.
That they would sell IPs? Dude, they haven't sold an IP in their entire history.
I know.
That's a stupid take. That's someone that doesn't know anything about gaming.
It's coming from a perspective of this is how PAs operate, and so this is how this deal will be done.
This is the problem. This is the problem.
You're going to love the last one. Ideology imposed on EA creatives.
No way. He said that? Oh my God. I got to read this thing. This guy's an idiot. This guy doesn't understand at all. He certainly doesn't understand the Saudis.
Yeah, like Scopely games are now fully idealized. And Nintendo, by the way, with their... Anyways, I'll give my quick take. I think there's 2 main drivers for this acquisition. Number 1 is economic diversification, where the country is hedging against oil dependency. This is what Saudi Arabia has publicly informed as their strategy. It reads clearly, and they see entertainment and gaming as an important way to diversify. The number 2 is actually they earmarked $38 billion to make Riyadh a gaming hub. $38 billion. So they already have the Esports World Cup, Scopely, Niantic, Nintendo, Take-Two investments, EA. they interestingly sold some of the stakes in Asian gaming giants like NCSoft and Nexon, but that's a different story. Anyway, that's part of it. So that's their strategic goal. They want to diversify, and they've earmarked 38 billions to do it. And then the second thing is the powers that be, the rulers, have genuine interest towards gaming. I've heard stories from very credible sources, big time investors who are in Riyadh meeting with, the powers that be, having the dinners and so forth. And when the dinner is over, they told this person, all right, now we go and play. They went back to the palace, and there was a gaming hub with esports like trainers, and everybody put their hoodies on and played till 2 a.m. League of Legends on the game. Like, this is the people who make the decisions. They actually love games. That's why they say, you know what? Put in 38 billion. We want to have games here.
Exactly. That's actually what I tried to explain to Jason as well. It's like, they're in it to win
They
it,
just
man.
like it. They just like it.
They just love this business. They love this industry. They want to build. They don't want to destroy,
Yeah.
So
They have gaming chairs and hoodies and coaches. Like
Coaches.
the coaches. There was a professional coach. When he went in, there was a League of Legends coach waiting for them in the gaming house. And everybody put their hoodies on and sat on the gaming chairs and started playing League of Legends. This is a true fucking story. I'm not going to name who, but yeah, I truly believe that there will be studios opening in key Saudi Arabian cities after this acquisition.
well, that's the other thing. It's like you're not going to build an EA Sports hub in fucking Riyadh, for Christ's sakes. And now I'm doing it.
It's going to be like they're going to start somewhere. They already opened up a Scopely studio.
Let's move on.
It's part of the strategy. Anyways,
All right.
Josh Shanley, give us your UK take.
My UK take, I have no stake. I got questions. Especially for Eric. 19 billion in debt on an EBITDA of a tenth of that. I just want to understand. I mean, like, interest isn't free. How crippling is this debt burden? How much cash flow is actually like left for reinvestment? How important are these cuts? And then I just want to learn. You said running out of comps is a negative. What does it do? Because my first thought was, well, couldn't it actually raise multiples for the industry if you're running out of public comps?
Yeah. So this is the big thing about like having $19 billion in debt. Like, how are you going to service that debt? But I think what people don't understand is that EA makes like $2.5 to $3 billion a year in free cash flow, right? They are a very profitable business, generally speaking. That is enough in essence to service the debt. And if they remove like $300 to $500 million in spend potentially, like that even adds more to that as well. And so that should be plenty, right? And they also have all the rest of the companies within their ecosystem, Scopely and Niantic, et cetera, that could help service this debt as well. But I actually would make the argument that it doesn't really fucking matter. Dude, this is Saudi Arabia, dude. They got $1 billion under the couch, dude. Like, if they want to help them out, if they run into any type of cash flow problems, they'll just pay it off, dude. They don't give a fuck, right? They got money coming out of their ears over there, This is more speculative in my part. Like, I think the 35 million was like set by the prince or someone and basically say, hey, this is what we have for you to spend, and then make up the rest of it other ways. But that doesn't mean going forward they won't pay it down themselves, right? Like, this is Saudi Arabia. Dude, JP Morgan, just wants Saudi's business, Eric Kushner's 2 billion, 60% of their business was being funded by the PIF, right? I don't know what Silver Lake's involvement is, or if Saudi is an LP in Silver Lake, maybe, who knows? We don't know.
If Saudis are LP in Silver Lake,
we don't know. I don't know for sure, guess. But no. We don't know for sure, but I'm pretty fucking sure that they are, right? So this is all like a circle jerk between these like big financiers. Goldman Sachs, dude. That motherfucker has made more money on this industry at Goldman Sachs than anybody, dude.
Shout out to Himal. Shout out to Himal Thacker, by the way.
Dude, that guy is a badass, dude. That guy is a badass motherfucker, dude. He should fucking retire, dude. He has made so much money in this space.
He needs to sell Take Two, and then he's cleaned the house. Once he sells Take Two, he's cleaned the house.
Drop the mic and move the fuck on, dude. What are you doing? It's killing me, this guy. I met him. Oh, anyway, all right, moving on. Okay, now I'm going to bring it down a little bit. Actually, let's just leave it at that. Look, At the end of the day, it's very esoteric how to describe why not having publicly traded names is bad for the industry. But it's less visibility, less value benchmarking. The retail and public equity space is huge, trillions of dollars of investment, right? And if you don't have access to these names or publicly traded names that you can see what's happening on a quarterly basis, you lose visibility into the industry as a whole, right? So it's just not good for other companies going forward to go public, for instance, right? It also creates less liquidity, right? Less IPO tracks, less acquisition currency, et cetera, et cetera, et cetera. So it's just not good for the space to have these companies taken off the board.
Chris, what would have happened if Disney would have acquired EA? Because that could have been the case as well, right?
I think that would have been far more value destructive. I would have been far more negative on Disney acquiring EA than the Saudis, because I think Disney doesn't know fuck all about video games, and they would have fucked it all up, right? Easily, right? But the one question that no one was really seemed to be asking is, why is EA selling? Because it seems like they have like a good pipeline. Battlefield looks strong. FIFA is going to be really good this year. Sports, football is good. So it looks like they have some runway, and they were at an all-time high. And so they got a premium on the all-time high. So that's actually pretty good. I think one of the things you have to appreciate about EA is that the majority of the board has been in there more than 10 years. Dude, Andrew has been CEO for 12, right? That's a long fucking time to be a CEO and dealing with this bullshit, right? Dealing with people like me talking trash about Andrew. Like I could even perform at that level, right? Like anyway, but the point is like, what they want is their legacy to mean something, and having a graceful exit is great rather than leaving in some kind of like, sham or something like that, getting acquired and getting destroyed or getting pushed out or whatever. So this gives them ability to actually get out in a meaningful way, stay somewhere for 3 years, and then go on to be like a private equity guy at some sports firm or something like that. Like is probably what Andrew will end up doing. They've been trying to sell, according to the Vapevine, to like big tech like Microsoft and Disney and Amazon even. It didn't work out for a variety of reasons, but I think this gives them the board a way out and to leave as heroes, right? And again, that's the other reason I don't think there's going to be mass layoffs after these transactions, because that would not be a good way of going out, right? After 12 years of being at the helm, this is not as negative for the industry. This is still negative for the industry, but not as negative compared to like Activision, Ubisoft, and Embrace, right? Which were just complete, absolute train wrecks for this industry.
Yeah. Who do you think PIF acquires next?
I think they got to digest this shit for a while, dude. I think they're off the acquisition for a while. Yeah. I think they've gotten all the pieces that they need in order to own a huge share of this industry. Shit, maybe they should acquire Microsoft, Xbox, dude. That would be huge, dude.
When Xbox goes to sale, that's true. Because now the private equity could actually chop it up and take that. Do you think EA will be acquiring anything after this acquisition? Because Scopely's M&A team is hunting still. They're as aggressive as ever. They acquired Niantic. So EA Corp Dev can just go and take a break.
No, Corp Dev is going to be, they're out to lunch, dude. They probably will help with integration and help with the strategy. They'll help the guy in Toronto, whatever, but they're not doing any acquisitions anytime soon.
Partnerships, have good meetings.
Actually, someone that knows something about video games, they'll go up there and start helping the guy in Toronto.
Okay. Corp Dev takes a break.
Web stores. You've seen what good looks like, but have you seen great? AppCharge is the direct-to-consumer platform backed by the likes of Supercell and built by monetization pros from Moon Active, Playtika, Huge Games, and others. People who know the difference. AppCharge powers over $500 million in transaction a year for top studios, optimizing every detail. Deeply personalized web store offers custom-made design, industry-leading monetization features, in-game payments, SDK, and more. 70% of top grossing games already have a web store, but the ones scaling fastest, they're doing it with AppCharge. Learn more at appcharge.com.
In today's hyper-competitive digital landscape, understanding your app's journey from discovery to download isn't just insightful, it's the difference between scaling and stagnating. Enter AppsFlyer, the undisputed leader in mobile attribution and marketing analytics. They've mastered the science of making every ad dollar work harder by revealing exactly where your players come from and how they interact with your app. Their platform transforms mountains of complex data into clear, actionable intelligence that separates winning campaigns from budget-draining experiments. And I know that many of the top game companies leverage AppsFlyer and are a key partner in their success. AppsFlyer, where your app's potential meets performance.
Game devs. Here at Heroic Labs, we know that great gameplay is what players love, but integrating metagame features like challenges, progression, and rewards is crucial for retention and monetization. But coding them is a tedious and time-consuming process. That's why top studios have turned to Hero from Heroic Labs. Hero provides a complete suite of battle-tested metagame features that are quick to implement, letting you spend more time on the core gameplay experience. Ready to ship fully featured, engaging games? Check out Hero today at heroiclabs.com.
Well, let's talk about AppLovin's e-com and self-serve expansion going live today.
So AppLovin is, I guess, opening the floodgates with a huge bet on e-com. After about a year, they're ending the US-only e-commerce restrictions. What does that mean? It means we're going to see more clothing, makeup, home improvement ads, not just on Instagram and YouTube, but in games as well. This is a pretty big TAM unlock for them. It's an international market expansion and a new market, like an adjacent market expansion at the same time. They're trying to transition themselves from gaming to a broad ad tech play to increase their scale and hedge against the cyclicality of mobile gaming. Basically, Adam wants to be Meta. They believe they can hit 20, 30% year-over-year growth for the next several years. And AppLovin stock is up like almost 60x. Almost 60x from 2.5 years ago.
I sold it at like 100% return. I was like, this was good. It's like, I should have just kept it.
Dude, this stock has been a career maker from some of these hedge fund analysts, dude.
Oh
this is like field of dreams for hedge funds to own something like this.
So yeah, I get the feeling that Wall Street buys it. I get the feeling that Wall Street buys this story. Yeah.
Dude, it's like 100 times for EBIT or
yeah. So what's my take? I mean, AppLovin hasn't gone fully all in, but damn, they're going really hard on e-com. Instead of fortifying Max or expanding their ad ROAS kind of gaming mode, they've built a self-service platform to attract and sustain e-com demand. The actual e-com targeting product was mostly new people, but it's not like there was no picking between A and B. Yeah, that's forward-looking and it increases upside, but it has left a lot of Max's features, for instance, ad quality, pretty outdated. Unity has been able to exploit that gap by unbundling their ad quality product from LevelPlay, the competing mediator, making it free for Max customers and getting high adoption. Essentially, because AppLovin prioritized e-com, the strategic trade-off is Unity now essentially has a Trojan horse bolted onto Max, sucking up data on what ads are running in which games and what ads are running to which players. That's targeting data. That's the real trade-off. The risk isn't that e-com is a bad bet. The risk is whether AppLovin made it before locking down their base fully.
Wait a minute. Adam is not an idiot, right? He's not going to give up what he owns in order to go after something else, right? He doesn't
own the inventory.
He can't shut this shit down and block Unity from doing this shit?
He already has. There are multiple companies doing this already, including like App Harbor has been doing this for years. Unity's move is they just had the best one. It was gated behind LevelPlay. They're doing it now. It's integrated into the Unity SDK or the ironSource SDK. They went to customers and they just said, hey, push this button. It's already in the SDK. If you push this button, we will tell you which ads are causing more churn than revenue. AppLovin doesn't have that service. And so who wants to know what 10% of ads are showing in their games that are causing very little revenue and really, really high retention loss, aka LTV drag? I do. We turned it on straight away. And we were able to make material LTV gains immediately. If they were to, just like ban it, well, first of all, bro, it's my inventory. I'm showing ads in my video game. You're serving them. I own my inventory. Are you really going to tell me I'm not allowed to put an SDK in my game that looks at what's showing on the screen in my game? You don't own the inventory.
But what I'm trying to say is that Adam will protect his revenue on the UA side in gaming at all costs, right? Like, he's ruthless and he knows more than what you know about this stuff.
Of course.
So he must be aware, or his team must be aware. And so they will ultimately figure out a way of closing that gap, right?
There are some things that are hard to do.
All right, move on.
And so when we look at the data that we're seeing right now, Q3 just closed, and word on the street is that AppLovin may be softening. Meta appears to be growing on Androids. Vector is growing everywhere. And if they're gaining share, odds are AppLovin is giving it up. And that's certainly, what the early signal suggests. Now, the counterpoint to this is that every penny of data that we see right now, we're hearing on the street, is from publishers. AppLovin could just be dramatically increasing their yield expectations, aka they're winning a little bit fewer bids to make a lot more money per impression.
Right.
That could be happening. We don't know. We have to wait until we see earnings come in. But the real question is whether AppLovin can grow e-com and defend gaming at the same time, because Meta and Unity are gaining signal. Their biggest advantage, obviously, is Max, but also AppLovin has iOS all to themselves, and it has iOS e-com all to themselves. Meta and Google, they can't bid effectively without what we call probabilistic attribution. And they haven't had it since IDFA was deprecated. The impact is like fucking massive. On Android, Meta and Google add up for 40% of the revenue that we see on Max on Android. On iOS, it's fucking 7. 40 versus 7. That's the impact of Meta and Google being starved for probabilistic attribution.
Are you talking e-com or are you talking about UA? Like
all UA. This is all UA.
All UA. Okay.
Yeah.
You just said that Meta and Google are actually making headway in terms of IDF probabilistic attribution or fingerprinting.
Yeah.
So they could gain share on AppLovin.
Yeah. I mean, AppLovin, they've been winning and beating these guys because mommy and daddy aren't home, but they're coming. Meta has solved and shipped probabilistic attribution. They're only running it
probabilistic attribution means fingerprinting. They are tracking your IP address, which is the same motherfucking thing as the IDFA was back in the day.
Yeah.
Okay. All right.
So first, actually, just to follow Eric down this rabbit hole, we had the IVFA. We had this thing called probabilistic attribution. We were probabilistically estimating who caused the install. And the feature, like the ML feature, like the variable that was the most impactful was called IDFA. We took it away, and it turns out the model still works fine. But now the Apple very successfully branded it in this like fingerprinting steely way. And so now the thing that we've been doing since I entered mobile in 2011, it's still the same. We just have a little bit less data now. And MMPs like AppsFlyer and Adjust are just crushing it, finding ways to measure anyway. But here's the thing. Meta has solved probabilistic attribution. Marketers know, like today, you can run iOS UA on Instagram and Facebook. And you can measure probabilistically. They're just not really bidding on IAA yet, on Max. We don't know why. And Google is close. I think both could be back bidding on Max on iOS, like in 6 months or less. That means AppLovin has limited time to scale e-com on the biggest platform for them with no competition. And if they don't scale it before things return, things become much harder. And so that might partially explain why they've been willing to make strategic trade-offs to risk some of the gaming product with less investments to make sure that they execute as fast as possible on e-com. Because that's the bottom line. They have to do both. Yeah, gaming is a lot more locked down for them than e-com. So it makes a ton of sense to shift resources there. But if gaming stagnates, Meta and Unity and probably eventually Google will take share. If e-com is slow to scale, Google and Meta could challenge the story itself. And right now, after the S&P inclusion, which created kind of an artificial bump, they're posting 100 times PE. There's not that much room for disappointment. Compared to Meta and Google, AppLovin is an elastic band. If Meta and Google, if their CPM, they're targeting is 5% worse, there's no one bidding for their inventory. They own Instagram, they own YouTube. Their revenue drops 5% if CPMs drop 5%. AppLovin, no matter what they imply on CNBC, they don't actually own any inventory. They're only outbidding others. And so if their CPMs fall 5%, either literally or relative to the competition, that's an elastic band. It will be more than a 5% decrease to their revenue. So they will not just lose revenue per impression, they will lose impression counts. Do I think they can do it? Actually, I do. I think it's totally possible. I don't think it's guaranteed. I think 100 times earnings for that.
So sell. Are you saying sell?
I mean, I don't own any AppLovin stock. I don't own any ad tech stock, for the record. I have chosen to not participate in that while I'm talking about it publicly.
I'm going to reiterate what I've said a million times. These two names, Unity and AppLovin, are hedge fund hotels. People are trading in and out of this stuff a lot. And buyer beware. And people like Nebu out there do it. Anyway, stop it. Just stop. You should be involved. Buy the fucking BTI, dude. That's the best advice anybody can give you. Anyway.
I think he just got renamed.
I really don't want to ask this question, but I'm going to ask it anyway, because I know this is important. And I know you've been actually very bullish and it's actually worked out quite well. But can Unity really rise from the ashes right now? Does Bromberg have what it takes to turn this thing around? Or are they always going to be like face down in the dirt like the last 20 years, you know? And the key seems to be at the end of the day, after all this work I've done on this stuff, is that do they have access to engine data? Without access to engine data, it doesn't seem garbage in, garbage out. If they have access to this data, this would be huge for them. And are the publishers actually willing to provide that data for access to Unity? I've actually heard some rumors that they're trying to sell the Unity engine, which makes no fucking sense. If what I said earlier was true, it doesn't make sense for them strategically to get rid of the engine if they really want to embed it within the ad tech, collect data for the ad tech. So not only do they have AppLovin to deal with now, but they actually have Facebook and Google that are coming at them with better probabilistic attribution. How in the fuck can Unity compete in this environment? That's what I want.
So from my point of view, Unity can absolutely 2.5, 3x our current scale if they execute. Historically, that company has always had execution problems. And I don't think that Bromberg is some magic pill that you change that spot out and things are just going to magically get better. So regarding the data, I want to stress kind of two things. What really matters is data quality and data uniqueness to differentiate in ad tech. And Unity has 3 tiers of data that they can unlock. The low-hanging fruit is level play data, any ad quality data, any kind of data that's already owned by Grow.
Garbage.
Yeah, okay. It's going to have some moderate impacts, especially when they're collecting data directly from Max. In fact, there are a lot of ad tech plays that are just getting funded now, and the whole business model is we're just going to harvest Max data from under them.
Okay.
It's definitely the easiest in terms of effort, definitely the lowest in terms of impacts. But if you want to prove out that you can pipe data from not vector to vector, the shortest path is level play and this ad quality data. It won't be the biggest, but it's definitely that first easy layer.
Okay.
The second layer, splitting engine data into 2, is the IAP data. Those are nice, clean events. They come from essentially Google and AppLovin, so they're very standardized, and they can ingest that easily. That has massive impacts. If they have unique data on every purchase or most purchases that are happening, assuming they can get the data, AppLovin doesn't have that. That's a huge advantage. And the majority of UA spend on mobile isn't on ad ROAS, it's on IAP. You know, imagine a world where we spend more money on games showing ads and on games creating actual like top of funnel like IAP revenue. The final thing, and this is what they've teased, and I'm very suspect on whether or not they can actually execute, but that is the engine engagement data. That is like, even if AppLovin were to do this, this would be like insane Dark Souls level difficulty. I don't even know if AppLovin could do this. Because IAP8 is just a bunch of clean events.
But they don't collect that now, is what you're saying.
In Unity 6.2, they have claimed to have built all the pipes so that they can collect it if publishers consent. Here's what Unity's message should be. AppLovin is taking unprecedented margins. That directly impacts your business. If you share this data with us that you are already sharing with Google via Firebase, we will A, grow your performance and yield with Unity by about 25%. And B, we will directly increase competition with AppLovin, forcing them to lower their margins. This isn't about your UA today. This is about the fact that AppLovin owns 60% of in-app ads on iOS. And if you don't create competition, your margins in the future are at risk. And again, we're asking for what you're already giving Google via Firebase. That's the pitch.
Sure.
Yeah. And it costs nothing and it's a button press.
All right.
Yeah,
10
sure.
years ago, they could have collected this data as well, right?
If they believed that they were an ad tech company and if they could execute, yeah. And I think you're keying on the exact concern. It's like they need to hurry up. Like what
Dude,
what
they've
is
been
happening?
talking about this since the IPO.
Forever.
Right?
Yeah.
And I'm just like, fuck off. Okay. Like you haven't done it by now. You're not doing it. And the fundamental problem is that AppLovin, for every dollar spend, is still going to be better than spending on Unity, right? Like
no.
No?
Dollar for a dollar, right now, their performance, for Dream games, I'm roughing this in. People I know at Dream, like, don't get mad at me for getting this way wrong. But if they can spend $1 on Unity, they can probably spend 4 or 5 on AppLovin and get the same performance. So yeah, the scale is very different.
The UA market is not like podunk games companies making where the real dollars are at Monopoly Go and Stream and all these like Turkish games that are spending with 2-year paybacks and stuff like that. You can't scale that right now on Unity.
Correct.
But you
and not
can
as well.
scale it on
And
AppLovin.
for now.
Because Unity is such a low base, they still can grow 2 to 3 times to where they are right now because they're in such a shithole that they are, right? Even on the best scenario for the next couple of years, they can't scale to even close to where AppLovin is.
Clarifying question. To where AppLovin is today, or to be AppLovin at that time?
No, to be in AppLovin where AppLovin is today.
Yeah, there's no fucking way. That's completely unrealistic.
Okay.
Yeah.
Okay.
That is completely unrealistic.
So in essence, the publishers still need to spend the majority of their budget with AppLovin for the foreseeable future because Unity is just not big enough to move dollars at that scale.
I would say the way we have observed in-app ad SDK deltas over the last 10 years is that changes happen slowly, and then just like AppLovin's like rise, almost all at once.
Oh, okay.
And that is because, unlike with like AppLovin versus Meta, if AppLovin gains share, you don't just stop spending on Instagram. But if you're spending on Unity and AppLovin, you're buying the same inventory. AppLovin does not own any inventory. If Unity wins one additional impression, it goes away from AppLovin. So it's not just that the denominator changes, the numerator also changes. And that's why I'm talking about this elastic band. It's uniquely important to AppLovin versus Meta and Google that they defend their base, because unlike Meta and Google, they don't own their inventory. They have no O&O.
I can hear Matei in my own brain saying, Eric, shut the fuck up. You don't know anything about ad tech. Stop talking. Or UA. So let's just move on.
All right.
For the record, I am actually relatively bullish on Unity because I do believe what Josh is saying. I just think there's some limitations to their ability to actually execute on this shit.
I think this is enough beef for one episode. We've covered Xbox, we've covered Saudis, we've covered EA, and we chew on AppLovin and Unity. So, Josh, an absolute pleasure to have performance marketing expert on this podcast that has been lacking since Eric Seufert or Seufert, or however you want to pronounce it, Cruz has been absent from this. So thank you for joining.
Yeah, thank you so much for having me.
Thanks, Josh.
Give Josh a shout out and let us know if you demand him back on Twig, because he will be coming in on other segments. So thank you everybody for listening. Take care.
You did it. You made it to the end of the episode. As a fan of the show, it would help us out if you'd subscribe and leave us a review on the podcast service of your choice. Those stars and likes, while a small action on your part, mean a lot to us and help to grow the show. More importantly, are you a member of the Deconstructor of Fun Slack group? If you have 5 years or more of games industry experience, go to deconstructoroffun.com/Slack and apply to join. Join the games industry best professional community filled with peers always willing to lend a hand, or subscribe to our newsletter to get all the latest insights from the Deconstructor of Fun content creators. Thanks for listening.